Ladies and gentlemen, after such an enriching session, we are beginning with our plenary session 2 on building trust in financial reporting, strengthening corporate communication. Please allow me to welcome Ms. Aprajita Sarkar, General Manager, TCS. Mr. Kaushal Kishore, Partner, Walker Chandiok & Co. Ms. Archana Bhutani, Member, CII National Committee on Financial Reporting. Mr. Raghuram, Mr. Amit Agarwal, Chief Financial Officer and Chief Operating Officer, Lockdown India. May we have with us Ms. Vandana Saxena Porya, Strategic Advisor, India, the Institute of Chartered Accountants in England and Wales. Over to you, Vandana.
Good morning. Is it still morning? I think it's afternoon now. Good afternoon, everyone. So we've been discussing a lot of topics this morning around trust in and this particular session is looking at trust in financial reporting, and it couldn't be more relevant or more urgent. Venkat said this morning that trust is dynamic. And as we heard, we're living in a time with regulatory turbulence and transition, and across the world, financial governance is really in flux. On one hand, in India, we see India moving forward very strongly through business responsibility. We've got SEBI's new circular on minimum information for RPT, which we'll be discussing, the consultation paper on digital assurance. We've got broader sustainability and business reporting requirements, which all point to deepening financial transparency. But globally, as we heard, both from my managing director, Mark, and from Venkat and the other panelists this morning, globally, the picture is far more mixed. In the US, we've got the Trump administration. There's potentially rolling back of sustainability and potentially anti-corruption initiatives. Some financial disclosure mandates are being softened in the name of reducing the business burden. And even in the EU, which was once seen as a global frontrunner on ESG, due to changing political agendas, some sector-specific climate disclosure requirements are being delayed and scaled back. So the reversals tell us something important. The regulations, as Venkat said in the last panel, may ebb and flow, but the expectation for trust and ethical governance remains constant from investors, from stakeholders, and from society at large. So that's why today's, I think, conversation is so important. So we're going to be exploring 4 key areas that underpin the trust in financial reporting. Compliance. Are we doing what matters, or are we just ticking boxes? Ethical governance. How do we move away from the legal obligation to the moral leadership, especially with geopolitics the way it is, and the radical uncertainty that we have surrounding us? And that leads into the third point, which is crisis resilience. What makes a business truly shock-proof? And finally, none of this can be done if we don't have a strong audit profession. So strengthening the audit profession is going to be absolutely vital. How do we build confidence in those who safeguard financial integrity? So, just one last point. I think Ajay Bhushan Pandey, who we're missing very much this year, the now outgoing chair of NAFRA, he always used to talk about the 5 lines of defense, and I know that's a subject we've talked a lot with Venkat and the others, and Anant mentioned it this morning, that the 5 lines of defense, the management, the boards, the auditors, the investors, regulation, all has to work together to strengthen trust. And I'm delighted, actually, on this stage we've got effectively 4 of those 5 lines. Really, we've got the auditors, we've got the preparers, and Archana, in your capacity, standard setting as well. So we've got 4 of those, and we're all investors, I'm sure. So we have 4 of the 5 lines. So I want to begin, and this is a question, I think we've got a great panel here. We've got Aprajita and Amit. First of all, you're preparers, and the government here is focused on business responsibility and responsible business. So therefore, there will be regulatory oversight. But how effective are current regulatory frameworks that you're having to deal with, thinking about RPT, BRSR, digital assurance? Are they enhancing transparency? Aprajita, if I can start with you and then Amit, go over to you to think from a preparer's perspective.
Yeah. So good afternoon, everyone.
Can we?
So all of these, that's, mandating minimum information for RPT review by the audit committee, or mandating reassurance audit for BRSR, or even the proposed digital assurance are definitely steps to increase transparency, trust, and ultimately build up investor confidence. But having said this, there is a very real risk of information overload. And the reason is that's quite complicated. But let's just go back a little. So the fundamental characteristics of financial reporting are what? They are basically relevance and faithful representation. So relevance is judgmental, and VC companies hesitate to use judgment, and so that really ends up in information overload. So we see in the case of this minimum disclosure for RPTs, which is to be presented to the audit committees, there seems to be a kind of a presumption that the management withholds critical information from the audit committee at the behest of promoters. And all RPTs by default are prejudicial to the interests of the minority shareholders. And so audit committee is basically forced to provide approval with inadequate information. This lack of trust on promoters' intentions could be due to specific cases which have been investigated by regulators, but to paint the whole promoter community with the same brush is probably, just ends up in information overload and nothing else. And even in the case of this the proposed digital assurance, we find that reconciling data from multiple external sources with the financial reports, what is it going to lead to? So yes, there would be some benefit in terms of cases where there are probably discrepancies, but in most cases it will just end up in information overload. So a suggestion could be that with use of technology, the regulators could think of taking up an initiative of maybe making sure that different systems of different agencies talk to each other, so that only the discrepancies identified by them, so where the numbers are not really reconciling, only those are referred back to the companies and investigated on exceptional basis. So judgment, so we do see hesitancy in applying judgment, and so there is information overload, and the key points are missed out by the investors. So how can we change this? So I guess the main thing would be collaboration, as we've been talking since morning. Otherwise, these kind of errors, probably this is kind of the type 2 errors, which our Honorable Chief Guest was mentioning in the morning. I'm not really sure, but this is definitely a very real kind of risk, and a collaborative approach involving stakeholders, industry stakeholders, regulatory bodies, and others should help in minimizing the overload.
Great. Aprajita, thank you. No, that's great. That's useful that you talk about how reconciliations are important and how that could be something that the regulators could take up. We'll come back to that when we talk to our other two. What would you add to that then?
Good afternoon, everyone, and thanks CII for inviting me here with this August panel. I have a little different take on what Aprajita has said on the information overload. I think it all depends on how well a company leverage technology and kind of how well the company integrate the compliance processes into its system and processes. So I think if there are multiple benefits. One is that I'll take the example of GST. Initial 1-2 years, we were thinking, yeah, it is information overload, a lot of things we are kind of submitting, the reports were but at the end of the day, since last 4 years, 5 years, we are finding it very super, easier to file GST reports and everything else, which is easier than even the VAT days. So a lot of, initially it might feel burdensome, but I think in the long run, it all, the moment it gels well into the system of the company, I think it all helps. So first is obviously GST example, and it is, as I said, it is now looking easier than the VAT days. Second is, talking about BRSR, sustainability reports and other things. I think companies have started looking at tangible benefits of even voluntarily adopting. Then otherwise, why would a company on whom BRSR is not applicable, they would be doing voluntary disclosure? A lot of examples are there, as we might know. Ujjivan Small Finance Bank, Indigo Paints, Sula Vineyards, RBL, all of them are, voluntarily adopting BRSR. Why it is the case? Because there are tangible benefits. Some tangible benefits that I can talk about, and a study says that around 88% of the customers become loyal when you are open about your governance standards and reporting standards and sustainability standards. Around 76% of the customers today, Gen Z and others, they stop buying products from the companies if they are not really concerned about sustainability and environment and everything else. So, and more than anything else, probably we finance guys are more concerned about investments. So 89% of investors will invest in those companies who care about sustainability and governance. So I think it is very important, and there are tangible benefits on the top line and bottom line as well, apart from being mandated by the regulators. So it is. I see it as an opportunity to demonstrate all these regulations, which BRSR you talked about RPT. I think these are an opportunity given to us, the preparers, to demonstrate our governance system to the world and get the benefits out of it. Yeah.
I think that's it's really great to hear both sides of it. At the end of the day, in an environment where liquidity in some ways is reducing, as you say, it's going to give greater credibility and there'll be greater trust in those companies that are voluntarily following. But at the same time, we have to acknowledge that there is a lot of extra work that's needed. And I like your point that in the beginning, it always is a lot of hard work. Having said that, let's move over to the regulators and auditors. Archana, perhaps I can start with you. Anand talked this morning about type 1 errors and type 2 errors. And I know, Kaushal, you'll also, I'm sure, add in, especially about type 1 errors, the knee-jerk reactions against things. But how can regulators, auditors, and companies kind of align to achieve, I guess, genuine governance improvements?
Good afternoon, everyone. And initially, just to put my points in context, if you look at quality financial reporting, I won't say the only four, but some of the key prerequisites of audit, of quality financial reporting, and that would also cover your lines of defense. It includes your sound internal control environment. The second would be sound corporate governance. And I think corporate governance and financial reporting cannot be de-linked. They cannot be seen in isolation. The third would be the appropriate reporting and auditing assurance standards that provide a clear criteria. And the fourth, I would say, is the robust regulatory regime that allows innovation and continuous improvement. And somewhere, your lines of defense also fall into that. Now, for reliable financial reporting, of course, auditors do have an important role to play, but each stakeholder of the ecosystem needs to step up. It is not just the auditors, like I said, it's even the company, the audit committee, the board, the regulators, all of them need to kind of step up and play their part well. Even the investors, we usually don't talk about them, but the investors are also an important actor in the entire ecosystem. They have the ability to challenge the audit committee, the board, to ask for more information if they feel that is what is needed to make informed decision, to understand disclosures better and see what more is needed, even to kind of advocate for, a more cohesive regulation and so on. So I think in the broader context for governance really to work, I think each has to play their part. Rather than just expecting one stakeholder to kind of fix this. Is there any magic bullet which will fix all the issues and trend? The answer is no. There is no such magic bullet. And I think at a broader level, this would require, multi-stakeholder discussion. It would require due process of standard setting and global collaboration. Having said that at a broader level, if I can just taking from what Aparajita and Amit have also added, I think we've been also talking about, when we talk about quality financial reporting, we've been talking about transparency. And the question is, what is transparency? Somewhere I feel, and I could be wrong, there is increasingly transparency is getting associated with just more disclosures. Now, is that it? I'm not really so sure. And while, yes, I'm not saying all regulations obviously have their benefit, etc. The process is how you leverage them. I think it's all about striking a balance. So yes, maybe some have been leveraged well, but some, if I can just to add, for example, in terms of real governance, if you ask me, and I think somewhat it was alluded by Mr. Ananth also in the morning, it's substance over form is what we usually call, but now we've also started referring to legislative intent, spirit of law. He gave the evaluation example. So if you know what it is, just call it out. And while we want principle-based standards, but in the end we kind of keep pushing it towards maybe making it rule-based in terms of lay down what it really means. Now, if you do have principle-based standards, it will come with certain judgment. And that is where some bit I take from what Aparajita said. It's all about, are we willing to take those judgments? So for example, I'm taking a very, very basic example. India's one got revised last year to say, okay, rather than this information overload, we'll let you choose what accounting policies to disclose. You pick up the financial statements, I don't see much impact. Everybody's taken the safer route of just saying, let me still repeat all the policies. And I think this is where the issue of trust comes in. The industry is worried that the way they will apply the judgment, how would the regulator look at it? The regulator is a little wary of giving too much leeway in terms of applying judgment because they feel it would not be applied in a very responsible manner. So I think it's all about building the trust, that multi-stakeholder dialogue, like I said. The multi-stakeholder dialogue can probably help address this trust and see how we can leverage and really apply it in the appropriate sense. Yeah.
And I guess forums like this, which are multi-stakeholder, are a really good way of being able to do that as well. Okay, Kaushal, over to you. Do you agree, disagree?
Thank you. No, I agree with that. And most of the things Archana has already talked about. It's an overall ecosystem we are talking about, which is very soft, but very critical. Compliances, sometimes they sound like a tick box, of course. Just one point, that all the 5 lines of defense are sitting there. We are all investors in whatever extent we are.
Yeah.
So when we're talking about the compliance, sounds like a tick box, but it's not. Each of the lines of defense, they need to work, and Archana pointed that out. This is really necessary that they work in their, they have the accountability, and they have the opportunity also to do all of this. The intent and substance is very, very important. You can't ignore that. And it's a very soft point, and one of the questions where Rishikesh answered, he says that, with irrespective of everything, if there is something goes wrong, that's the intent, and then the law prevails on that. So I'll build on that. I think the tone at the top has to remain, and that is very, very, very important from my opinion. I think that's all I would say. And there are best practices the companies follow, of course, without, as a soft point, without any regulations also. So nothing, additional around.
Okay, thanks for that. Amit, I want to come back to you. When it comes to compliance, one of the big areas that's come up is non-financial reporting. And I know that you had some points that you wanted to make on non-financial reporting?
Yeah, I think, as I said in my previous talk, is, there are a lot of tangible benefits on non-financial. So BRSR is one example of all the non-financial reporting and how do we play out the governance systems into the company. I think, and I have talked about percentages, so tangible benefits. I think it is very important from not only from the, compliance perspective, but it is a business reality. Nowadays, if you do not adopt to these non-financial disclosures, then probably you'll be you'll be affecting your top line and bottom line as well. That's the point I wanted to make, yeah.
Okay, thanks. Thanks for reiterating that. I think our auditors actually came on to, we touched on the intent. So I'd like to move on to that idea of intent and ethical governance. And Kaushal, I'll ask you first as well. There is still an expectations gap. I mean, it's been there since the day we started, but how do auditors navigate that expectations gap between regulators, investors, and corporates? I mean, it's still very much felt, certainly in the media, that it's the auditor's responsibility. How are you navigating that also with the regulators?
Very controversial question, that expectation gap, and very all through, if you've heard NFRA chairman, he's been talking about there's no expectation gap. Everything is written, please follow. That's what the normal expectation is. There's nothing which is a gap. There have been a lot of talk around, and very controversial talk with the auditors, our watchdog, bloodhounds, etc. also. And they said that this is not the situation. You can't say. So it's become more like a myth that yes, watchdog, bloodhounds. What is your responsibility around this? The difference has been blurred. No expectation gap. If you're an auditor, if you are a gatekeeper, that's what you've assumed, and that's your responsibility, and that's your choice. If you're a gatekeeper, you can't just be sleepy. That's what I would say. So the long term, in the last 100 years, we would have talked about what is your responsibility. Is the fraud detection is a liability or the responsibility of the auditors or not? If there is anything which is so perpetrated which you can't identify, is a very different thing. But you can't be cozy, and you can't be ignoring an elephant in the room. So I think that's how I would say. So I would not see expectation gap. It's a matter of how the auditors have to behave, and they should continue to behave that.
Okay, so you talk about watchdog and bloodhound, and you talk about the idea of having skepticism, but at the same time not being sleepy. So do we need another dog expression? Do we need to be called support dogs or something?
On a lighter note, the auditors have always been talked about like a dog and equated there, but I don't think the expectations have changed. I don't think the responsibilities have changed. To my mind, they continue. It's more like skepticism which has to remain, and the auditors have to behave like auditors. So. Nothing else, actually.
Okay. Archana?
If you look at the frauds, many frauds have arisen due to weakness in operational controls. Also, another causal factor which has usually been identified is poor corporate culture. So I think these two, of course, you cannot kind of ignore. And as far as the roles and responsibility of those charged with governance is concerned, there is lack of consistency globally. So there is no single, global consistency in terms of the role of those charged with governance as far as fraud is concerned. But these two factors do need to be considered. Now, auditors should also be responsible, and I would use the word also be responsible. But I believe that auditors is the last line of defense. Yeah. Okay, and I'm saying last line in a broader manner. If I was to go by of 5 lines of defense, as per NIFRA, probably it'd be the 3rd or the 4th or whatever. So auditors is a detective control rather than a preventive control. And when you look at the expectation gap is defined as what the users expect the auditor to do and what the audit usually is. And actually, when you go there and you look at what the public expects, the public at times even expects the auditor to identify even a non-material fraud. Now, is that possible? I don't think the auditor can identify all frauds. The other thing that we need to be mindful of is that there is a hindsight risk that affects the auditing profession. So individuals therefore may overestimate the extent to which the outcome could have been anticipated, prior to its occurrence. So when you look at the expectation gap, actually the expectation gap of what the stakeholders expect before a negative event occurs is very different from their expectation after the event occurs, right? So I think that their self is something that needs to be kind of considered. I think, so like I said, yes, of course, auditors do have a role to play, but so do the other stakeholders. And if you look at the recent IAASB consultation, are they really changing the role of the auditor per se when it comes to fraud? I don't think so. My understanding of the changes is that they're only kind of trying to see how to bring in consistency in application and how to change the auditor behavior. And I think that's some of the principles are going to get clarified, re-emphasized. For example, professional skepticism is going to get reinforced through the changes, the focus on the risk management controls and so on. More communication with those charged with governance, etc. I think that's how they are trying to kind of look at managing this expectation gap.
Yeah, and talking of those, the others charged with governance, so back to Amit and Aprajita, thinking about it from your perspective, you obviously are part of the leadership, you've got your audit committees. How do you think you can collaborate more to kind of bridge that governance gap?
It's like ethics cannot be ensured through internal controls.
Yeah.
So that's a factual statement. Now, it's driven by the value system of the organization and the code of conduct that is, we communicate to all the company communicates to all its stakeholders, and that has to be followed in the letter and spirit. So those charged with governance has to provide this comfort to everybody else who is in the organization as well as, outside, who's dealing with the organization. And how do we do it? That's by leading by example, reinforcing ethical behavior, penalizing the opposite behavior, and there should be a suitable mechanism for transparent communication. So just what Archana mentioned. So the auditors or any other stakeholder should feel free to express their opinions or anything which they think is, they need to express. So that's and even the other stakeholders in the organization.
Can I just ask you on that? So what do you have internally that encourages that kind of...
Yes, so we have the code of conduct, the Tata code of conduct, the code of ethics, and that is by those charged with governance, that is followed by letter and spirit, encouraged to be followed, and not only encouraged, I would say enforced. It's enforced throughout the organization, right to the new recruit, and not only for the employees, also for the vendors and the other stakeholders.
So there's education and training that's going on.
Yes, continuous
regularly.
Education, training, and which is updated according to the the changes or the needs of the times. So that's there are specialized functions and processes headed by very senior leadership who look after those kind of functions. So that's given a lot of importance. So it's within TCS as well as the Tata Group.
And you have other processes in place so that if people have concerns...
Yes. So if they have concerns, redressal systems and mechanisms, again, right up to the ground levels. So it's not that if you, I don't know whom to go to, somebody who's just probably just joined the TCS after college and has an issue, doesn't know where to. So it's not that. Even right up to the smaller teams, there are teams and champions who would actually be tasked with these kind of things which they need to take up with and there's a chief ethics officer also.
Great.
So definitely I don't think there is an expectation gap as such, because auditors as well as we are all attuned that corporate governance is about risk management. So I don't think there is any expectation gap, but yes, at operational levels there might be some which which are being bridged by as the situation arises. So those things do, but definitely there's no expectation gap in the objectives.
Okay, great. So you're hearing from TCS on that side. Amit, do you want to talk a little bit about Lockton or what you're seeing?
Not particularly about, but I have been fortunate enough to, being other side of the table as well. I was part of KPMG and Grant Thornton earlier, and I know, it's particularly for expectation gap I wanted to talk about, is I think auditors are expected to do what they are supposed to do. And I'll take a real life example of Satyam. I was part of KPMG at that point of time, and I know the audit processes. The biggest problem with Satyam scam was the auditors did not take third-party confirmation from banks, and they relied upon management disclosures and management statements and all. When in a mix of control testing and substantive testing procedures, it is very hard to not find a fraud, such as fraud of this kind of extent. I'll tell you what I mean by that. If control testing fails, auditors simply say, okay, they qualify the report. But if substantive testing like this fails, if they're not able to find third-party confirmation from banks, they would probably have gone to look at the daily statements. They have not looked at daily statements. They have not. They have just looked at monthly statements and yearly statements, which was first. So in substantive procedures, if it fails, you either restate the numbers or you refuse to sign. There's no third. So I might be labeled as a bit contrarian, but I agree with Mr. Kaushal. You need to do, you need to follow all the procedures, but definitely, as everyone else has said, that there will be certain things that will never be, auditors will not be able to catch, and those charged with governance have to take that responsibility. So it is a balance, as everyone else said, but at the same time, I think it is not very unfair to demand that kind of expectation from auditors and by the public, by the government, by the regulatory authorities, I guess.
Thanks, Amit. So yes, there is a need, and as you said, there are procedures that can be put in within the organisation, but at the end of the day, is it the last rung? But the auditors are there, and they are expected to do their job. And so I want to touch on something else which could be labelled as ethical, or we do need to talk about it, and that's SA 600, and the idea of the principal auditor's role. So perhaps Archana, I can start with you. Thinking about the trust and ethical compliance across multiple component auditors, if the principal auditor is going to take full responsibility, what are your thoughts around that?
I really do not know. When you say if the principal auditor is going to take responsibility, I think the way the NEFRA circular they're already taking that responsibility.
Yes. Yeah.
I'm not really sure what the concern there is, to be very honest. If I don't know. I mean, there's any specific point you want me to clarify?
Well, just
how is it going to work?
How it's going to work with the principal auditor.
So I think there is, of course, it's going to be a big change as far as the practice in India is concerned. So traditionally, we've been used to relying on the work of the component auditor. And the reason I think this issue came up is because while the standard did have checks and balances, it did say that, yes, you can place reliance on the work of a component auditor, but you actually had to do some test to say, is the work really reliable? I think somewhere the standard was being applied in a very liberal manner, that it was like a blind reliance without really testing. And I think that's where the concern of the regulator is. So if you recollect, SEBI did try and fix this some years back by amending the LODR, where they had put in some minimum steps for the principal auditor. I think NEFRA has just taken it a little step further. Their interpretation, the NEFRA circular, I would say somewhat different from how it was really understood, the standard was. Like I said, it is somewhere midway. You're not just simply relying, you're applying your checks and balances and seeing whether the work can be, and then, kind of work around it. So With the revised, one is the proposed standard as well as the NEFRA circular, definitely much more onerous as far as the principal auditor is concerned. There are quite a large number of challenges, and that can take another 15 minutes just to talk about it in terms of just even checking the competence of...
Can you talk about just a couple
just
of them?
the competence of just even right now, at least, let's say if the component auditor is a chartered accountant, it's a given that you can rely, but now that is not enough. So even from a competence perspective, it's a much more detailed analysis. You look at the quality mechanism that the component auditor may have. You look at are there any orders passed against the partner firm, etc. So much more detailed analysis. Similarly, in terms of the only saving grace is that, and I'm using the word saving grace, is that the auditor's report you can still place. You can state reliance on the work of the component auditor, but for all practical purposes, actually you're taking full responsibility. So it's as good as the component auditor being an extended team member. That's how I would put it. The responsibility lies fully with the parent auditor. So yes, of course, that would, in terms of the involvement, if I have to take the responsibility as the parent auditor, the procedures, etc., that I would apply on the work of the component auditors are going to be much more extensive than I would have done in the past.
Yeah, thank you. And so, Kaushal, going over to you then, what challenges is that going to bring up?
I don't think the intent is very different from what it was earlier. The intent was that the people take responsibility and they're accountable for what they do. I do not see, as per the regulation or anybody who has clarified it, they have changed anything so far the standard is concerned, but they've clarified lots of things in terms of the expectations. What they believe is, if you're doing something, you should be accountable. Things were falling through the cracks. Unfortunately, the responsibility was, distributed. And with that distribution, nobody was aware who's done what and what they should be accountable for. And that is the reason of this clarity. I think, to my mind, it's a very welcome kind of a change. It may create, it may rather clarify and create some work for some people, but the intent is no different then. It's not a challenge from that point of view. It's a matter of awareness and doing more what you need to do.
So, but I agree with you, but I guess what I'm asking you is, assuming that you have the intent, there'll be no changes. But now that it's there, what challenges can you see coming up with dealing with?
As I said, I think it's a matter of more awareness and training and knowing what they need to do. So people will have to do more. There were a lot of organizations, they were understanding in the same fashion the way they understand today, as per the new regulation. So it's not a change in the regulation, it's a matter of more training and awareness and doing what they need to do more.
Okay.
Yeah.
All right. I'd like to move on to the third part, because I think with everything happening geopolitically and the changes in the environment, crisis management and corporate resilience has become buzzwords, and they're important. And it's very difficult, as Venkat said this morning, with so much uncertainty. How do you forecast? How do you work out how your valuations are going to work? Everything. How are you able to say that what's happening in the business world and your projections? How can you stand by your projections? And I guess what I'd like to ask you, Aparajita, first is, what makes a business, in your opinion, what makes a business resilient when the next economic shock hits? And how can businesses prepare? What are you doing as TCS to kind of prepare for any uncertainty that's coming up?
So effective crisis management is definitely built by effective long-term business decisions and sustainability and decisions which go for building up the sustainability. So that's what we do. And of course, that is how do we do it? By adopting a very, very focused risk management approach. So it's not only like, earlier it was only the traditional risks, but of course it's not only traditional risks, it's cyber as well as geopolitical, the legal, whatever. I mean, there are so many kinds of risks, and for that technology is there to, that's how we depend on. I mean, it's not that you depend entirely on technology, but definitely technology plays a very big role in that. And from a financial reporting perspective, the impact of these decisions, these long-term business decisions, and the impact of the risks factored in these decisions, they all need to be reflected in the disclosures in the financial reports. So what I mean by that is, like, say, our estimates, our judgments, which we report in the financial reports, should be such that they match all these decisions. So if we visualize a particular risk in a certain area, then the estimate of, I mean, how we have estimated that is reflected in the disclosures. So the financial reporting reflects, because financial reporting is basically what it just faithfully translates or represents what is happening. So our work from a financial reporting perspective is to basically faithfully and with relevance, so that it's all relevant to the investors at large, faithfully represent these decisions and the impact of these decisions, rather.
Yeah.
And so that has the inbuilt risk, or whatever we've been forecasting or we've been visualizing in the future. So that's how we do that.
Okay, thank you. Amit, over to you.
Yeah, I think a lot of risk management techniques that Aparajita talked about, and a new one that has come in last few years, cybersecurity. So I think an organization needs to have all those techniques adopted. And one thing that I remember when crisis hit hard at the time of COVID, the first thing that we look at is liquidity. We should have sufficient liquidity to run the operations, and though my industry was not that negatively impacted, but we had some credit lines sanctioned, and just to brace for the if there is any pressure on the liquidity. So I think very important liquidity. Second is diversified asset portfolio or the investment portfolio that should be diversified, so that there is a cushion for the to save from the shocks. Third is agile operations. That is very, very important, and this is something that almost all of us must have experienced during COVID times. If we were not agile enough, if we never knew, most of us never knew that I have completed the entire merger and acquisition transactions, due diligence, valuations, a large part of integration, everything being on the hybrid model or work from home model. So I think being agile is very, very important, because you never know when that black swan event comes. And last but not the least is crisis response team. Like government agencies have that CRT team. A lot of organizations have started having that CRT team, and it will have some it will attend to some physical crisis as well as the cyber and other attacks. So I think it is very important to be prepared for all with all of these.
Yeah, thank you. So preparation is the key. Kaushal, as an auditor, how do you kind of assess that they're doing the right job, especially with the current amount of uncertainty?
See, I think I'll just add to a couple of points. From the action point of view, as a corporate, what they've said is right. Handling corporate, I'll just add to a couple of things on the corporate failures, that each of the corporate failures should not be seen as a showstopper. Unfortunately, at the moment, what happens is that any accident happens and it's a showstopper. It's not that one car accident happens, you close the road. That should not happen.
Yeah.
And we should continue. So there would be things that will happen. The hindsight, I think Archana talked about the hindsight, and the presumption of fraud, that should not remain all the time. Something happened, and always there is a fraud in the beginning itself. That's the assumption. That should not be the right thing to do. There's no need to brush everything with the same color. So that is another thing, because it stops all kind of efficiency, kind of growth and everything, and people start working in the same direction. The last thing on this, which I would say, is the faster conclusion. So there's whole amount of legal battle which continues, and there's no conclusion, and you go on. So the waste of resources. I think these are a couple of things. The way the corporate failures are to be dealt with. Now, in terms of the one which you asked, the second question, if you can just repeat that, please.
Just how are we handling it effectively? And do you think as auditors we're...
To my mind, I think from the regulators and from the auditors' point of view, I would say a couple of actions which we certainly require. Today, there is lack of investment in the technology and in the audit process itself, because the structure, the way we work as a practice structure itself is a little, I would say, I'm sorry for saying so, but it's a little faulty. It does not allow you to flourish. It does not allow you to go beyond what it is at this point in time. So the whole lot of capacity building which has to happen, and I'll give you some kind of an idea, 90,000 chartered accountants, they work in isolation as sole practitioners. Is that the capacity that we want to deal with the larger corporates and the multinational corporations and the way the growth is happening? Certainly not. So we need investment, we need multidisciplinary partnerships in terms of the structure, etc. So as auditors, we can deal with that kind of a capacity. So far as the regulators are concerned, I think it's been talked about since the morning. There are two, wide ends, starting from the support and guidance to the punitive measures. So there has to be some kind of a balance in between where you have trust, the regulators and the stakeholders, they have the trust and they deal with the things in that fashion. To my mind, these are some of the ingredients we require.
No, that's a good point. And I think capacity, actually, before I go on to the capacity building point, Archana, is there anything you would add?
On the same corporate failure, handling corporate failure?
Handling corporate failure, and how do you, also, how do you assess in an environment of political uncertainty globally, whether everything that's gone into the financial statements, whether it's effectively, whether the projections have been, are reasonable?
I think these are two very different issues. One is, of course, the issue that you're talking about in terms of how do you ensure, that there is a whole lot of guidance around estimates and judgments. So, of course, you kind of follow the auditing standards as far as that is concerned. But some of the, if I was to quickly just say some of the best practices, of course, you would try and take as much external data as possible. You would do sensitivity analysis, etc. So you do an industry benchmarking. You'll apply those checks and balances. And of course, any future projection does have its limitations. So that's why I said the more external, the more industry-specific information you can get is better, and the sensitivity analysis will help you. So those are some of the things when it comes to estimates and judgments. And of course, some of these can be very critical, and they could require, auditing, the accounting standards also require that if for these significant estimates and judgments, you have a specific disclosure in the financial statements. So that provides relevant information to the users in terms of where the, the risk areas could be, in that sense. In terms of... Sorry,
Vandana, Shobhi is going to push us out now.
Yeah, okay. So I'll be quick. Yeah, on the regulatory bit, I think I largely agree with what Kaushal has said, but just to quickly add a few points. One, India cannot be acting in silo. Okay, so what is happening outside is impacting India, and what is happening in India is impacting the global. And therefore, I think it's also about global collaboration, learning from there. The second is that within India, if you ask me, I think there needs to be better collaboration, because we've been discussing that audit quality is not just audit quality, it's quality financial reporting. So when you're looking at quality financial reporting, the role of other stakeholders does become important. And therefore, how does the audit regulator interact with the regulator, let's say supervising or having oversight over companies? What about other regulators? So this, if there can be better cooperation and collaboration, and I think it was mentioned in the morning, co-creation between industry and regulator also. So I think all these things are required to see how these can be handled better. Many regulatory agencies, as I understand, have developed their own mechanism, wherein they do their analysis, they have data analysis, and they capture a lot of information. I think it will be helpful if these can be shared between the regulators on a real-time mechanism. And the other bit which we've always been saying is that you give there's so much of information that you submit to the regulatory authorities, what do they do with it, right? So, and that is what would even encourage right reporting, right? So if you can see it is being used for right decision making. Now, do the regulators use this information to identify red flags? So can they proactively act on these red flags? And then, again, it was mentioned in the morning, rather than the regulator coming right in the end when everything has been done. Can they proactively use this information, the data they have, use them, identify the red flags to take proactive measures? So I think one, just to kind of summarize, cooperation between the regulators, sharing of information, data analysis on a real-time basis. And third is using the information submitted to kind of identify the red flags. So I would largely say that. And since I know we have very limited time, I'm just going to take the opportunity even here just to talk about what we were saying in the morning, that it's important that the regulator be an improvement regulator. Yeah. So we spoke about, rather than, I think Mark mentioned, how can the regulator be supportive rather than punitive? I think that is also very important. Yeah. So one is, other than sanctions, can the regulator provide opportunities for remediation? Second, and there can be various, I'm not getting into those, there can be various other options available. Also, the second bit is, can they provide more opportunities for dialogue and maybe better explanation? And the third is, if you ask me, is consistency between the, the various procedures. So we've got multiple regulators. There is no nodal regulator. Each regulator has its own process. The inspection process is different and so on. So can there be streamlining of and consistency between the regulators also? That would help.
Okay, brilliant. Some good points there. I'm going to end with just asking you a quick question. I think, Archana, you've already answered it, and that is if you could implement one regulatory or governance change to improve trust in financial reporting. I think Archana mentioned opportunities for remediation, extra dialogue, consistency between regulators. Kaushal, what is your one change that you'd like to make?
I'll ask for two.
Okay, two.
I think very, concise is, we need, as auditors, of course, I'm representing, if alternate practice structure, the current structure is not working well.
Okay.
And second, a settlement mechanism, which is necessary for the auditors and the regulators to deal with.
And a settlement. Okay. Aparajita?
It's just simplification and collaboration.
Simplification and collaboration. Amit?
I think first thing that we have talked about is communication and disclosures by companies. More, I think it is very important to keep doing maximum disclosure that is required, and it gives a lot of perspectives to investors, to the public, to the regulators and everyone else. Yeah.
Great. Archana?
So I'm glad that Kaushal mentioned settlement mechanism. I didn't want to close it without referring to that. I think that's extremely critical. But if I have to just, apart from the ask, if I have to just leave with one ask in that sense, I think there is a need to balance. So yes, you do want regulation, but how can regulation be in such a way that the regulators get the relevant information so that they're able to make effective, smart regulation without, impairing kind of the ease of doing business. I think there is a balance is what I would actually request for.
Brilliant, thank you. I don't think we have time for questions. What, Shobit? Where have we got Shobit? Is he? Oh yeah. Do we have time for questions? No. Quick, two questions from the audience. We have one over here. Can we get a microphone over? Any others? We'll take the two questions and then we'll answer.
Yeah, Kritika from Cummins. I think thanks Aprajita for representing the industry, because it tended to get, every time we talk about, governance or this, what I would like to put it to the panel is, every time a dollar chases governance, that's $1 less in the actual business investment.
Sure.
So every time we are talking about a fraud or anything, how do you build that balance? Because you also have to go back to the stakeholder. Like as a controls leader, I have to go back to the stakeholder and say, do more documentation for your related party, change your entire related party structure because somebody decided that, this is required. So how do you want me or others to convince that that dollar should not go into an actual production structure, but should go into a governance or, investment into documentation?
Compliance versus growth. Yeah?
You also want FDI, where another country has far less documentation than India. So it becomes a critical balance.
Sure.
and we tend that there's one fraud, you tend to put 10 more controls, then
Thank you.
this will not work. So that's
Great,
a question.
thank you. If you could, I think there was somebody in front. Thank you.
I am an insolvency professional. I come across cases where type 1 frauds are largely happening because the disclosure on the turnaround time and business cycle time, how the assets and liabilities go awry. So what kind of reporting structure we can build in for ensuring that the assets and liabilities are in line or more or less in line with the business cycle, or they are quite wide off the mark, because type 1 errors largely are hidden in that.
Okay, thank you very much. Who would like to go first?
So I think what the first question you wanted to ask about ease of doing business and how do we ensure. I'm a strong proponent of these governance and regulations, I think. And, for example, NFRA coming up recently with the amendment, suggesting amendment to India's 21. If it was there earlier, the recent news that you have heard, IndusInd Bank, 1,500 crore, there was some management discretion in delaying the foreign currency fluctuations accounting, would have not have happened. So I think I am a strong proponent of, the regulations, and we need to probably shift towards that typical old time mindset. So NFRA is just the, like PCAOB in US. There we don't see so many conflicts with the accounting body, but here we see NFRA versus ICAI. In fact, India's 21 suggestions were kind of supported by ICAI. But to that sense, I think it is important to initially keep on having the right actions and keep on giving the right messages. Maybe in short term, it might not help ease of doing business, but in the long run, it will build investors' confidence. It will build, bring FDIs, more FDIs, and build the robust economic system that the country is looking for, I guess.
Great, thanks.
I think just on
Archana?
the first one, I just want to, he just kind of mentioned what I was trying to say. I think it's all about long-term versus short-term. So if you're looking at long-term growth, I would not look at this as this or that. I would look at this and that. So I think they both go hand in hand, especially if you're looking at long-term. And I think if you really, we've been discussing about doing it in the right spirit, etc. You do it, I think you'll find it worth every dollar you spend.
Great, okay. I think that's all we've got time for. Thank you very much. I think a point that I would ask you to consider as we close is it really about compliance? At the end of the day, it's human beings, so it's more about the character. And if our character is going towards co-creation and collaboration, the future looks good. Thank you very much.
We'll part for lunch, and we'll begin with session 3 from 2:15.